Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, we did start the day on a subdued note, but we had such a good recovery. At one point of time, we saw the Nifty recovering nearly 200 points from day's low. But of course, we came off from the day's high as well. But nevertheless, we managed to clock a triple-digit recovery from the day's low where the Nifty is concerned. Even for Sensex, a good 400-point recovery from the day's low. And we managed to end the day in the positive zone, although it was just about 32 points higher on the Nifty and 104 points higher for the Sensex. The broad end of the markets continued to underperform today as well. The mid-cap index was down 0.4%, and even the Nifty small-cap index, after a one-day rebound of sorts of 0.5% or thereabouts, we saw a 0.5% cut coming in today. And the breadth, if you talk about that was also pretty much evenly distributed between the gainers and losers. So 1:1, that was the advanced decline ratio on the NSE. And we had some bit of a volatility, a jump in volatility, so to say. The India VIX, that jumped nearly 2% above that 14 level for today. Of course, if you look at the sectors, metals, as a pocket was shining bright. The likes of Tata Steel, JSW Steel, JSPL, all these stocks clocked in anywhere between 5 to 6% kind of a rally today, and autos were a close second among the top sectoral gainers, and so was the pharma pack. What didn't do well today? IT, 1.5% kind of a cut coming in there. FMCG, we see some bit of rebound on a particular week, but mostly the trend is largely on the lower side for the FMCG index today as well among the sectoral losers. If you look at the top Nifty gainers, as I mentioned, shares of Tata Steel, JSW Steel leading from the front. So these were among the top Nifty gainers, and so was M&M, Tata Motors, Bajaj Auto, Reliance Industries as well. Although it has come off quite a bit from its record levels, but it did manage to end the day with good gains. On the losing end, the technology names like Infosys, HCL, TCS, these were some of the laggards. On the other hand, you had Tata Consumer, top Nifty loser, UPL, some rebound here and there, but this stock as well mostly emerges as a loser on the Nifty on most days. Eicher Motors and Adani Ports, Adani group of stocks, of course, in a spot of bother today as well after Friday's sell-off. But I think some of them managed to recover slightly from day's lows. On the from the broader end of the markets, you also had Nifty 500 gainers in the form of V-Mart, Macrotech. It is one of the top, in fact, one of the top picks of Jefferies among the top 11 stocks for the next 5 years. Macrotech features on that list of Jefferies. You had Finolex, Thermax, Shoppers Stop among the Nifty 500 gainers. On the losing end, Coforge, the QIP plan didn't really go down very well with the street. So this stock was the top loser on the Nifty 500 index. So was Gujarat Pipavav, Tata Investment and BLS International among others. But on that note, let me bring on board our guest for today. Joining me is Kush Bohra, founder of KushBohra.com. Well, thanks a lot, Kush. Always a pleasure chatting with you. Thanks a lot for taking out time and joining in this afternoon. Good recovery coming in. Even on Friday, we managed to defend that 22,000 mark, barely so. Today as well, we slipped below that level. We were at one point in time looking at taking out 21,900. That also happens to be a crucial support. But we staged a very good recovery, and 22,000 still holds. Your thoughts? Any kind of reversal, or do you think the Nifty is going to be sideways in this 22,000, 22,100 level?
Hi, sure, Nandita. First up, a very good afternoon to you and to all the viewers. One of the rare times when I'm doing a closing show, but always a pleasure to be, sharing the screen with you. Well, I think for me, the number is 21,800 and 22,200. Those are the levels that we're looking at. It might just turn out to be a play the range kind of a market. Well, look, there was, we all knew and we all spoke about the excessive froth that was building up in the market, especially in the broader market space. That seems to have corrected, and then there are pockets of value emerging. So you'll see some active participation there as well, some recovery there as well. Index also doesn't really have too many negatives to correct much deeper from here on. If any surprises come along, that's a that's a different story. But up until now, there's the 50-day moving average that comes in at 21,900, and we've seen that defended for the last 4 sessions. I think I'm going to push that range a little lower. So 21,800 is the line in the sand for me. And on the upside, 22,200. Even if you see the options data, there is a fair bit of a build-up of the at the 22,000 put option. which is suggesting that the traders do believe, at least in the near term, that this level may not be taken out, at least not by a big margin. So I think we are going to see some sort of a consolidation in this range, which is from 21,800 to 22,200. Also a quick word on Bank Nifty. For the last 6 or 7 sessions, we've seen a lower low kind of a formation on the Bank Nifty ever since it hit that 48,000 mark. It's just been slipping one way lower. However, there is a case emerging where the risk-reward ratio will get extremely favorable. It's just that we've not initiated a buy call, on Bank Nifty. We want the fall to stem, and whenever we see it forming a base, there could be a long trade also emerging on Bank Nifty in the coming days.
Right, that was about the Nifty Bank and the Nifty, an overall view on that. But let's talk about the metal pack, right? I mean, it was shining bright, and how, right? The likes of Tata Steel, 5% uptick coming in there on an index stock. Of course, let me just give you a background as to why steel stocks are rallying so much. China industrial production data came in at 7% vis-a-vis expectations of 5%. So this triggered, a very sharp up move in the metal basket, in the steel basket, so to say. Of course, it will lead to higher global steel prices, which would benefit Indian manufacturers and, by improving their revenues as well as profitability. And of course, there was, a block deal as well, according to reports on Tata Steel. But here on, how are the charts stacking up for both Tata Steel as well as JSW Steel?
So very interestingly, we've maintained this view that whenever there's a positive news flow, that's when you can perhaps trade these metal counters. Otherwise, it's a very volatile space. You'll see these stocks jump up for 2, maybe even 3 sessions, and once that fizzles out, these stocks slip to newer lows. So this is where it gets a little tricky trading the metal space. As I said, as long as there's the news flow that's positive in their favor, not a bad idea to trade them for a day or maybe 2, but we won't have a positional long view on a lot of these names yet. Now, today, the move that we saw, on Tata Steel, in fact, that said, the 2 stocks that we like from this space are Tata Steel and Hindalco, the latter one being rather muted today. But Tata Steel has actually taken out the crucial resistance zone of the 20-day moving average, which was at 147.50, and on the back of very strong volumes. So there is a possibility that this stock could see higher levels in the coming days. So from a near-term perspective, you don't rule out a move to, let's say, 158 kind of levels also. But I would trade this with caution and take it with a pinch of salt. As far as JSW Steel goes, here too, you've seen some sort of a rebound from the 200-day moving average that the stock had slipped below. But this one might continue to be under a bit of a pressure because we're seeing selling at various points. Just to sum it up, Tata Steel could see further upsides, but the metal pack is something that someone should trade with extreme caution.
All right, extreme caution warranted when it comes to the metal pack. But of course, we had a chat about the Nifty Bank Index, but I want to particularly talk about an SBI. Stock has been under pressure ever since that electoral bond issue came to the fore. But even then, on a YTD basis, the stock is doing well. It has started participating towards the fag end of the record rally that we saw, right? But do you spot any reversal in trend, or do you think this is the dip that one should utilize to get into the counter?
So, it depends on your horizon. If you're looking at it from a medium to long-term perspective, then these dips will, for sure turn out to be a buying opportunity on a stock like SBI. These issues don't really have much to do with how the bank per se, functions. And even if you look at the price chart, this is more of a pressure that we've been seeing in the entire banking space. So I wouldn't read too much into it just yet. For me, the stock, as long as it holds above the 700, 710 kind of zones, continues to remain on buy on dips. However, if you see even today when the stock was up, the volumes haven't been all that great. So I won't go all out in terms of a trading position. But if you're looking at it from a medium to long term perspective, as long as the stock holds 700 to 710 kind of zones, this might present a good buying opportunity.
Right, that's the view then. The view hasn't really changed much, even though the stock has been under pressure over the last 1 month. But what about a Bajaj Finance? This stock has also been stuck in a downtrend, so to say. But we have, positive views from some brokerages trickling in. Anand Rathi has reiterated its buy rating. Target price is intact at 8,630. Of course, the brokerage may have met the management of the company, wherein they have said that they are on track to achieve the medium-term targets as well as market share gains as well. And of course, Anand Rathi has maintained that this particular company is among the fastest growing proxies for the Indian premiumization theme, right? All going well, in terms of business, despite the, there was an embargo on issuing new, EMI cards under 2 schemes, right? That came as a major setback. But, apparently that is already priced in according to Anand Rathi. Now, if you look at the stock movement, hasn't seen much of a movement, in the last 1 month or so. I think 6,500, 6,000, around this level, the stock has been hovering for quite some time. So, would you say that it is primed to break out of this particular level, or do you think it's going to be in this particular range for some more time?
Sure. So, Nandita, I'll probably take the data as far back as, October of 2023, where the stock made a high of about 18,200, close to, those levels. Ever since then, the stock's been in a bit of a downturn, and there haven't really been any signs of recovery. Now, that said, let me also put the caveat that this is one stock which used to be one of our favorites. We've recommended this to our clients over the years. However, for the last couple of months, we've been recommending an exit on this and a switch to Geo Financial Services. And that trade, at least so far, has turned out quite beautifully. Even now, if I draw a trend line, from the highs, the stock hasn't even come close to that. There's an attempt to breach the 20-day moving average, but even that has not been successful for the last about, 2, maybe 2.5 months. So for me, the pressure will remain. Every quarter, we do hear of the stock doing well in terms of the business performance, but just somehow it's not translating into the price performance on the stock. So as long as that doesn't happen, for me, this will be on a wait and watch kind of a list. And, as far as, you look at Geo, you have a much better alternative, and I'm looking at it only from a price, performance standpoint. I will continue to pick Geo over Bajaj Finance, at least till the time, the stock reverses and shows very clear signs of bottoming out.
All right. Well, that switch may have worked well. But what about Poonawalla FinCorp? Saw a very good uptick in the last few minutes of trade. There is news flow that the company has hired HDFC Bank veteran Arvind Kapil as the CEO. Stock was clearly reacting to it. But, whenever I speak to analysts about this particular stock, they say that the chart is pretty much very beautiful. Would you still say that the chart is very beautiful and is poised for more upside?
The only chart that I find beautiful is the one that makes money, right? There have been bouts where, the stock has actually done well. Otherwise, this is one stock that really tests, investor patience. So if you're one of those investors, who believes in this story and, is willing to hold on to this one, let's say for, a few quarters, maybe even a few years, this is when, you should get into it. On the whole, every downturn that we've seen in the stock for the last, I would say, 6 to 12 months has turned out to be a buying opportunity, and, just might be the case, even this time around. But, this may not be like a runaway candidate. So if you're a patient, investor and you're looking at, as I said, a couple of years kind of a horizon as well, Poonawalla is not a bad investment at all. So use dips to add more of this stock to your portfolio, but just don't expect the kind of gung-ho returns that a lot of other names have been delivering.
All right, be very patient when it comes to Poonawalla FinCorp. But another stock that was making headlines, and you could perhaps call it the stock of the day, was Coforge. Board has given approval to raise 3,200 crore rupees via a QIP. Recently, the company had shelved its plans to raise 750 crore rupees via an IPO in the US. Now, analysts fear that this amount, not fear, I mean, they take note that this amount that they are raising via QIP far exceeds the amount that they need to repay their debt, right? So now there is some chatter that perhaps they are looking at some kind of an acquisition. So which is why the stock fell 6 to 7% in today's session. But Morgan Stanley, although it noted that the quantum of fundraise is a negative surprise, it says that it would use the near-term weakness to accumulate the stock with a time horizon of 12 to 18 months. And Phillip Capital also believes that this is a company that will continue to be a strong earnings compounder as well. But would you concur with this view that dips should be used to buy into, given the fact that if you look at the performance of Coforge, I think on a YTD basis it's down somewhere around 6 to 7%, and Nifty IT index on the other hand, it's in the positive, 4.5 to 5% uptick on a YTD basis here. So divergent moves. So would you still bet on a Coforge from the mid cap IT space?
So interestingly, Nandita, the stock itself is giving rather divergent or mixed signals, if I can call them that. Today the stock is down on the back of very heavy volumes, and the next support zone really comes in at about 54.75, 5,500 kind of levels, which is a 200-day moving average. Now, could the stock go there one way? Maybe, maybe not. And the reason for maybe not is because the stock's already, gone into an oversold territory, and there could be a technical rebound that just might come around, and from there on there could be further short selling that could happen in the stock. So very delicately poised right now. If you have an existing short position, because the stock's actually been slipping lower from 6,800 odd levels, then no harm in maintaining that with a trailing stop loss of about 5,900, maybe even 5,950. But from here on, fresh shorting doesn't really look as attractive. So maybe on rise you can short, but that's a very near-term view. From a medium-term perspective, I would still wait and watch. I would see if the stock is indeed taking support at the 200-day moving average and even consolidating. Even that would be a positive sign. But right now, there isn't too much of a clarity on this. So I would just wait and watch before I take any further positions in Coforge.
All right, a wait and watch kind of an approach here as well. But what about auto part makers, auto component makers? Anything that's catching your fancy after government's EV policy, the new EV policy? Street is of the view that auto component makers will benefit the most, in the wake of increased demand if foreign players do enter the Indian market, right? So from the likes of Sona to Motherson, Sambardhana Motherson to Sansera, anything that's catching your fancy on the charts? How are these poised?
Quite delicately, because they've seen a bit of volatility. There was a lot of promise, but along with the market move, a lot of them gave way. Now some of these are sort of making a rebound, but some of these names that you mentioned are very close to their resistance zones, and if in the next couple of days they do take them out, then you could see new highs, at least new yearly highs in some of these names in the coming weeks. One stock that has caught our fancy is Lumax Auto. This stock we've recommended to our clients also time and again, from a medium to a long-term perspective. Even today, if you see, this is the third day of the move, and on the back of fairly decent volumes, the stock's actually closed very close to its 20-day moving average. So once that is taken out, I think new momentum will come into this stock. So Lumax Auto is one stock that we've got on our radar from this space.
All right, Lumax Auto looking interesting on the charts. But Anoop Engineering, do you track the stock, Kush? Because this stock, of course, was up 16% today. The board will be considering its maiden bonus issue. But if you look at the 1 year chart, you'll see that it has compounded pretty smartly. Is there a trade here? Do you find the risk reward attractive here, or do you think, it's an avoid?
Yeah, we didn't really have a very active track on this one, but if I just give a quick study on the charts, it's already close to the resistance zone, the year high that it made, about 3,200, and even today there was some sort of profit booking that came in around those levels. So from a risk reward standpoint and a near-term trade, it doesn't really warrant a fresh entry.
Okay, not warranting a fresh entry at the juncture. That's Anoop Engineering for you. But Macrotech, it was a good 6% up today. And as I mentioned at the start of the show, it is one of the 11 stocks that Jefferies has shortlisted for a 5-year period, right, among the top bets. From the realty space, Macrotech, do you think that warrants a look, or do you think players like DLF, Prestige, they look more interesting now?
So Prestige, did have a lot of promise, but it's not sort of delivering on the price performance at least. We've seen the stock head south and there is selling pressure. So this is on our wait and watch list. DLF, yes, seems to be doing well and taking support at lower levels. But the stock that we have on our radar is Godrej Properties. Here, if you see, there is volatility, but the stock actually does sort of tend to give a smart rebound. Also, if you talk about Macrotech, I think here too there is some positivity, although the stock did not really cross its key averages and slipped. But if you look at the last 2-3 days performance, also there is some sort of an uptick. So Macrotech is something that you can have on your radar from a near-term long position perspective. And overall, I think this space is poised for an up move from here on. But I think it's just the market pressure that's keeping some of these names down. So Macrotech and Godrej Properties are the two stocks that I will have on my radar.
All right. Lastly, Torrent Power. This was again another counter that was a buzz in trade. Of course, it did cool off from the day's high. Last week, again, I think it had won some order and it had hit a fresh 52-week high. Today, it came very close to that, although didn't really manage to defend that 1200 mark. Here, how are the things looking? Do you think 1300, 1350, do you think it has more legs to reach that level, or do you think, it has topped out for the time being?
So, Nandita, again, from a 3 to 6 month perspective, yes, 13, 15, in fact, even 1400 is a very reasonable, very comfortable target on this one. What is heartening is the fact that this stock really hasn't participated in the market downfall. There was some sort of a correction, but the rebound was equally sharp. And if you see, the stock is consolidating with a positive bias. So that is one thing that's going for the stock. However, what's happened is that, if you see the last couple of sessions, the stock's not able to sustain at those high levels. So, beyond 1200, there is a challenge with sustaining, above those levels. But given the kind of market scenario we are in, especially the broader market scenario, I think even holding up and having a positive bias is a positive sign here. That's a very clear sign of relative strength. So I think this is one stock that you can add to your portfolio. Let the market settle, let the volatility settle. I think this stock will start making a move towards those 1350 and 1400 levels also.
All right, let the volatility settle, and of course 1200, that of course the stock has not been able to defend that particular level. But of course quite a few stocks discussed this afternoon. Kush, anything that you're spotting on the charts for our viewers with a for this coming week? As in, we've just started the week, right? So for this entire week with a 1 week time horizon, anything that's on your radar?
Sure. A couple of stocks, Nandita. First up is Jio Financial Services. As I said, and as a disclaimer, we've been recommending this stock to our clients fairly regularly. So Jio Financial is something that you should have in your portfolio. You should use any kind of dips that come around to add some more. 375, 380 are the near-term targets that we're looking at. 330, 35 is a good support base. So, that should act as your stop loss. Bharti Airtel is looking interesting. There was a consolidation with a positive bias today. It's broken above that 1200, 1215 kind of range and closed above that. So I think Bharti Airtel is also something that you can keep on your radar. 1290 is a near-term target, and about 1175, 1160 is where you can place a stop loss. So Jio Financial Services, Bharti Airtel, and if I can add one more name, that is Siemens. Gradual, but a very clear uptrend on this one. So Siemens is also something that we have on our radar. So Jio Financial, Bharti Airtel, and Siemens. These are the three stocks that I would have on my radar for this week.
All right, three stocks on your radar. But with respect to an FNO strategy for tomorrow on the index, what would you recommend?
So Nandita, honestly, it's getting a little tricky, and I'll tell you why. I've been speaking to a lot of participants in the market, the ones who buy and the ones who sell. Interestingly, it's becoming very difficult for both of them to make money because of the spike in volatility. I'm very tempted to say that you could sell the 22,000 long straddle where you sell both the call and the put option, but this is only for traders who are very well versed with options trading. And this might just turn out to be a profitable strategy, but I would rather suggest that take a call during the day, depending on the trend of the day, and play the range that we discussed, which is 21,800 to 22,000. My sincere suggestion would be to play the day's trend via options and preferably go long. But if you're looking at a weekly kind of a setup, then perhaps a 22,000 straddle is also something you can consider. But please have your risk management systems in place and do have a word with your financial advisor regarding whether this fits your trading profile or not.
Well, yeah, of course, that's one disclaimer that we always use. Always, consult with your financial advisor and have your risk, parameters in place before indulging in trades. But with that, Kush, thanks a lot for taking out time and sharing your thoughts with us. It was a pleasure chatting with you, and look forward to interacting with you on the morning show sometime soon.
Likewise, Nandita. Likewise.
Thank you. Well, with that, we've come to the end of this edition of Closing Bell. Of course, we ended the day on a positive note. This week is likely to be fairly volatile given the fact that, we have the Fed decision later this week, and tomorrow, of course, we have the Bank of Japan's interest rate decision as well. So lots to digest when it comes to the global landscape. But, with that, we've come to the end of Closing Bell. Thanks a lot for tuning in. If you have any comments, leave them in the comment section below, and don't forget to follow us on our social media handles. But it's a goodbye from me for now. See you in the morning tomorrow. Have a good evening.